You are listening to ChartingWealth.com for Thursday, the 24th of September, 2015. We're starting where we always do with IYY, which is the total market. It's an index fund, an ETF, an exchange-traded fund that tracks the total market. Let's zoom in a little closer to what's been going on over the last few days. We always start with our two-day chart. We had a crossover back on the 15th going into the 17th. That's when we heard from Janet Yellen of the Federal Reserve. The market pushed just above the line that it had created for itself, which appeared to be a ceiling, still is a ceiling. It pushed a little above it and then fell back through. The latest two-day candle that we have formed on the 23rd shows us that indeed we have a pretty sizable down candle. We've not yet, however, crossed over going down on the MACD, our moving average convergence divergence, which is our big indicator. We also are still positive on the derivative oscillator. Let's break it down a little bit and we'll look at the 4-hour half-day chart. And what we seem to have happening here is over the last 2 days, the last 4 half days, that's basically the 4-hour chart is a half-day chart. What we see happening is we see a bottom somewhere around $97.78, almost $98. It's not gone below that. We have crossed over going down back in the morning of the 22nd of September. Did I just say August a minute ago? If I did, I was totally wrong. Sorry about that. We are, of course, in the end of September, have a crossover going down. We may have reached a bottom. Let's pay attention to that over the next few days. We have a down move on the 4-hour chart, but again, like I said previously, we have an up move on the 2-day chart still. So if this doesn't come to fruition, if the bottom is really somewhere around $98 and the market rotates back over on the short chart and starts going in the same up direction as the large chart, the 2-day chart, then that is your signal to jump in on that movement. It's the safest time to jump in. And we'll talk more about that if and when we see it. Now, let's go to the SPY, which is, and again, that total market was down about 0.2% today. SPY, which is the Standard & Poor 500, this again an exchange-traded fund that tracks that, looks somewhat similar, is much closer to crossing over going down, but it has a down candle for the last 2 days. We always start with the 2-day chart. It again moved above a little bit, closed a little bit above the ceiling that we had drawn in there after the Federal Reserve announcement back on the 17th of September, and then rotated back over. Let's look at the 4-hour chart and see what we see. Well, again, looks like we've got a little bit of a bottom here, somewhere around $193 on the SPY. But the derivative oscillator, it's moved back just a little bit. We really don't have any change in the disposition between the signal line and the MACD, but does look like the price action slowing a little bit. So let's continue to keep an eye on that. If it did indeed reach a bottom and the market rolls over on the 4-hour chart and starts moving back up, then that would be a good sign that you might want to get in. I don't know that that's going to happen, but we'll continue to watch for that. It may cross over going down on the big chart. Now let's go to the Qs, our last index that we'll look at. It has not crossed over, but it has had some down action. It did break through the 2-day trend line that we had previously drawn. And again, our 2-day trend line is important for us to follow. We've not yet crossed over going down, however, on the MACD. Some folks do like to get into moves the minute that a good solid 2-day trend line is penetrated. That may be you. You may have used that along with a crossover on the 4-hour chart. That occurred back on the morning of the 21st, and we've seen a down move on the Qs, but again, it's flattening out also somewhere around about 103 or so, where it's stabilizing potentially. Now, it could just be taking its breath and getting ready for a down move, but we don't know. We'll continue to watch, and That's where we are on those three big market indexes: the total market, the SPY, Standard & Poor's 500, and the Qs, which is the NASDAQ 100. Now, lastly, and for the record, 0.08%. Now, that's not 8%. That's 0.8% that the Qs was down for the day. Let's go to gold. Two-day chart on gold. The two-day candle is almost a doji. What is a doji? Well, it's a type of candlestick pattern that shows lots of indecision. We had back on the 17th of September and the 21st on the two-day candles pretty sizable up moves. However, the moves over the last 2 days have totally, even the high and the low for the two-day candle, well within the up green candle from the 21st. If we break it down in gold, and we're in an up move on gold, having crossed over on the 15th. If we look at the 4-hour chart, which those of you who listen all the time know, that is our go-to chart for gold. Take a look at that. It is still in an up move. It has not crossed over yet. This is typically a very good chart for charting gold and making money, whether gold is moving down and you're an inverse fund, or gold is moving up and you're in gold itself. We do have a crossover on the derivative oscillator. We don't have a crossover yet on the MACD on the 4-hour chart, so we'll continue to watch that. Well, folks, that's where the markets have ended up on Wednesday as we jump into Thursday, the 24th of September. We appreciate you listening to us every day and studying the charts. Remember, our advice is pay attention a little bit every day to the markets. Find good times to invest, jump in the market, and figure it out and make money. Now, for those of you who are listening on a daily basis, you know that we are not a stock calling service. We're an education company. We encourage you to get involved, learn to invest, learn to trade, and that is by opening a virtual trading account at any of the online brokers. Put $1 million in there, be a virtual millionaire, and then start learning to trade. And once you learn and you've consistently been making good positive trades over a 3 to 6 month period and you feel comfortable, then you can make your own decisions at that point. But please be very careful. It's your money. You worked hard for it. Make sure you understand what you're doing before you start jumping in the market. This is not gambling. This is using the charts as a roadmap to help you figure out what's going on so you're not confused by all the media noise. Join us on Facebook, Twitter. We love to hear from you. You can also follow us on Instagram, and best of all, go to our website. Listen to our training. We've got a nice 15-minute training I recorded just a few weeks ago on how to read a stock chart that'll get you going. So sign up, listen to us every day, follow the markets with us to success at chartingwealth.com.